Have you ever wondered how your savings end up as someone else's mortgage? Let's look at the entities that connect money across the economy. An intermediary is a middleman. In finance, they sit between those who have extra capital and those who need to borrow it. Most people do not lend directly to companies. Instead, they deposit money at a bank, which then handles the lending process for them. Banks, mutual funds, and insurance companies all act as intermediaries. They take on risk and provide services that individual savers cannot easily manage alone. Direct finance is like a handshake deal, while indirect finance uses a professional middleman to pool resources and simplify the process for everyone involved. Intermediaries excel at three things: lowering risk through diversification, providing liquidity so you can access your cash, and improving overall market efficiency. Without these institutions, it would be nearly impossible for individual savers to fund the massive projects that drive our economy today. Understanding these middlemen helps you see the bigger picture of your own money. Thanks for watching, and remember to keep learning.